Good morning, welcome back to the Junior Small P channel. Incredible week it has been, hasn't it? A lot of news, interesting changes taking place in the gold markets around the world. So much news, so much information. There's almost no way we can cover all of it here. And definitely not in one video. So today, those of you that appreciate the 2 video days will appreciate the prospect that we are going to have to produce 2 videos today in order to cover the bulk of material that there is to discuss. We're going to go over an article that I posted yesterday that was emailed to me from one of the viewers here. Really appreciate that. It's a lot of the information on the Shanghai gold fix and how that's working, and it almost appears like a top secret document, like something that was leaked out of China. So stand by for that video after this one. But just a lot of information. Let's just get right to it. I know you guys don't like to dilly-dally. You're on point, on task. Moscow and Shanghai seek to dominate gold trade. Topic we've been discussing for some time now. There's always been this Sino-Soviet pact, this this move by Russia and China to start to take control, or not really control, I guess is the word, but take more of a participating role and a more influential role in the world economy and in the gold price. I mean, these are, by the way, the 2 biggest purchasers of gold and some of the biggest producers of gold, which you'll see in this article coming up. You know, as we've seen over the last months to year, Russia becoming, one of the world's top gold buyers. Tremendous appetite for gold. We've covered that story. We've also seen how buying gold and having a lot of gold really helped Russia, especially when the ruble started to fall apart due to trade measures and other influences and things that were taking place around the world. Gold really helped protect Russia's economy at that time. So we've seen the appetite for gold in Russia vindicated, validated. We all know Putin likes gold. Here's a statement from this article. BRICS countries are large economies with large reserves of gold and an impressive volume of production and consumption of this precious metal. In China, the gold trade is conducted in Shanghai. In Russia, it is in Moscow. Our idea is to create a link between the 2 cities in order to increase trade between the 2 markets. First Deputy Governor of the Russian Central Bank, Sergei Svetsov, told TASS. China is the world's largest gold producer. Last year it produced 490 tons. Russia is 3rd after Australia with about 295 tons produced last year. Overall, the countries make up 25% of the world gold production. Now, that's an interesting opening for this article, and it's a fact that I don't think is getting a lot of attention here in the United States. The fact that Russia and China are kind of, working together in this way. And if you tie that into the news we saw earlier this week, just a few days ago, with the new Shanghai gold fix, all of this is kind of paving the way for trade with gold, with the barbarous relic, with the worthless metal, according to the Keynesians and according to so many financial experts here in the United States. The United States, it looks like, is going to be alienated or pushed to the side, and perhaps our influence will not be as much as it has been in the past. And that might be very bullish, very, very bullish for gold. I think it will be, as we've seen so far. Let's continue, though. At the same time, the central banks of Russia and China are the world's biggest gold buyers. Since the end of 2008, the gold reserves of China have nearly tripled from 600 to 1,762 tons. The Central Bank of Russia bought 356,000 ounces of gold in February, becoming the largest buyer of the precious metal among the world's central banks. Business Daily Vedomosti reported, quoting IMF data. Russia currently has 1,415 tons of gold. Among the countries with the largest gold reserves, China is 5th, Russia is 6th, after the US, Germany, Italy, and France. So, 2 heavy hitters, 2 major gold producers and buyers, attempting to link up, perhaps trade outside of the dollar, help establish a gold price of their own. And we'll see where this takes us, where gold goes in the years to come based on this information. I think most of you have your own assumptions on what that means for gold, and I think we're seeing eye to eye on that. From London Gold Fix to the LBMA gold price, let's talk about these changes quickly. This was a story I actually found that came out of China from CCTV News. Seems very accurate. I don't think this is some propaganda outlet. It's just, they're just passing on some fairly benign information. And it says the London Gold Fix was the most widely used gold pricing mechanism from 1919 to 2015. The London Gold Fix involved dealers from London's 5 biggest bullion banks establishing a common transaction price for a large pool of purchase and sale orders. They did that twice each business day. The Gold Fix established the price at which the gross amount of gold on buy orders matched the gross amount of gold on sell orders across all the participating banks. The London Bullion Market Association launched the new LBMA gold price in March 2015. Think of all the changes taking place in the gold markets alone, ladies and gentlemen. To replace the London Gold Fix, ICE Benchmark Administration manages the LBMA gold price and operates an electronic and tradable auction process. The Bank of China joined the LBMA gold price auction process in June 2015, becoming the first Chinese bank to participate in the Gold Fix process. So you can see there's the banks that participate in the London Gold Fix from 1919 to 2015. HSBC, Barclays, Deutsche Bank, Societe Generale, and Scotiabank. Now, remember, ladies and gentlemen, there has been some controversy as of late in the silver markets, and we've heard rumors that there are more coming out, more controversies that is, in the gold markets. 2 of the banks named, if I'm not mistaken, are HSBC and Deutsche Bank. And they, in the legal briefs that were released, have stated that they may release names of other banks involved in manipulations of the silver price. So, very good chance that there has been some manipulations in the metal prices, both gold and silver, that some of these banks have been involved. That might be another motivation, keep this in mind, of why Russia and China would like to be more involved in the process. Again, if you're one of the biggest holders and producers of gold, and you have these institutions in other countries falsely and illegally manipulating the prices behind the scenes, it would be within your interest to see that that is no longer done or allowed to occur, so that there can be a more honest reflection of what the price of that commodity is, being that you're a very big producer and holder of it. I think that's one of the big motivations here. Those countries want some honesty and some transparency in the gold price. Historically, as you'll see, we're going to cover this in more detail later, it's shrouded in secrecy, and it shouldn't be that way. Now, on a personal level for us, and on the national level, there's an article that really paints the picture on how gold is a natural hedge against both inflation and negative interest rates. We have seen that theme lately. What did the Japanese people do when NIRPs, negative interest rate policies, were implemented? What was their immediate reaction? They purchased gold. They purchased gold. I really wish, we'll take a pause for a moment. As you guys know, these unscripted, extemporaneous videos that we do on these topics, we get sidetracked at times and go off other paths. So, I know so many of you out there, most of the people that come to this channel see eye to eye. We all understand these concepts fairly well. There's so many people out there that immediately blow these topics off. They won't even click on these videos. They won't watch them. They can't comprehend. They don't want to comprehend. It's not that they can't. They're smart people. They don't want to. They've been told something else. They've been indoctrinated another way. They've been told their whole lives that gold is worthless, and so they believe that it is. It's so difficult to pass this information on to them, to show them, look at how important gold really is. Look what's happening. Look at the reactions nations have to it. Look how many nations hold it. Look how the Japanese people bought 8,000 kilogram bars. Look at the amount of news that is churned out every day regarding this yellow metal. How many banks are vying for dominant positions on determining the prices of it? These secret phone calls, these governments, the shipments of gold, how the price is fixed, how currencies are backed by it. It's an incredible, incredible commodity, and I just wish the people that discount it, or that think it's worthless, or that write articles like we've covered in the past. One of the most, I guess, popular videos here on the channel is that video we titled "Gold is Worthless." You know, that was based on an article written by a gentleman who proclaimed that gold will one day be on a trash heap of history. No one will ever use it again, and that's never going to happen. Many of you know that. Too bad we couldn't pass that information on, and that they couldn't see that gold is a natural hedge against both inflation and negative interest rates, that it could help protect them and their family going into pending financial crises or downturns. And wait till you see some of the other information here. I wish I could add commentary throughout it, but if we do, we don't get through the video, so we got to keep going here. As 2015 came to a close, most investors believed that 2016 would be a year dominated by a series of Fed rate hikes. Remember that? Every day we were hearing about new Fed rate hikes. They can't do it anymore. That conviction solidified in mid-October when comments from multiple Fed officials convinced many the prior hints that the Fed would stay at 0% rates had been false alarms. The Fed delivered on its promise in mid-December by actually raising rates by 25 basis points, 0.25%. Based on this, gold declined by 10% from October 14th to the end of the year, nearly matching its 6-year low. Many on Wall Street thought the declines would continue into 2016. They were decidedly wrong. I heard that repeatedly. All of you heard that. Even on this channel, you'll see comments. People were proclaiming, the trolls. They would stop by saying that gold was headed to $700 or $600 an ounce in 2016. It's not going to happen. It's not going to happen. We know that with confidence at this point. And in the first 14 weeks of the new year, gold rose 16%. The first quarter qualified as its best beginning year performance in 30 years. CNBC, E. Rosenbaum 414.16. The reversal was prompted by stumbling stock markets and a series of sharply dovish turns from central banks around the world. Along with that, what other metal has been shining brightly and, if not performing better than gold? Silver, climbing to its highest since May after entering what they're calling a bull market. Silver futures have advanced to the highest since May, a day after entering a bull market, as demand for exchange-traded funds backed by the metal approached a record. That's unfortunate because that's paper silver. People need to be buying and holding physical. Holdings in silver ETFs climbed to 19,904.1 metric tons, nearing an all-time high of 20,182.2 tons reached in 2014. Silver futures jumped 11% this month, among the best performances in the Bloomberg Commodity Index, helped by improving demand prospects for the metal in industrial uses. Aggregate trading on Wednesday was more than double the 100-day average for this time. One of my key negative takeaways from this is that whenever they say helped by improving demand prospects for the metal in industrial usages, because what that tells me, and this is what I try to pervade a lot of my silver viewers and silver fans, that industrial usage, if there is an economic constriction or a downturn, that's where we see demand, a lot of the industrial demand for silver really suffer, and we can see a price decline. So that always kind of, I get a little hesitant when they start talking about the industrial demand for silver. And I know believe me, I know silver has a monetization value. I know it's been currency for 7,000 years. I know the Romans used it, the Chinese used it, the Greeks used it. Every economy has always used silver in some way. We Americans have used silver. But I don't know what that price will be if there's a major economic constriction and that demand kind of tends to go away or wane a little bit. I know it'll still have value. I just don't know how to take advantage of that value. If it goes all the way up, you guys hear about the ratios of silver to gold, what they should be, what they are. You hear people talk about when the silver to gold ratio reaches this versus that, they'll sell and then convert their silver into gold and then slowly buy silver again as that ratio changes. I don't know what those perfect numbers are. My personal number typically has been in the past, when I have done that, has been about 40 to 1, 30 something to 1. When I could exchange, I think it was 38 or something to 1. 38 ounces of silver for 1 ounce of gold is when I really executed that transaction. And it worked out. I felt that I did a good job in locking in those silver gains. That was back when silver was around high 30s, $40 an ounce, somewhere in there, if I remember correctly. It was a while ago. So anyways, moving on. Heavy silver trading, silver bull market attracting interest, volumes above average. So we could see silver going up for the remainder of the year. There's probably going to be some dips, but it's definitely on a climbing streak here, and that's good. Good for the silver buyers, or those of you who have a nice position in silver. Now, this article here isn't really news. It's more of like background information. And it's going to create a segue into our next article, because one of the big themes we've been kind of covering these last couple of videos has been this whole price fix. The whole story about Moscow and Shanghai, the Renminbi, and gold, the Yuan, which is also, as you know, the Chinese currency has really two names, I guess, the Renminbi and the Yuan. So we're talking about how the Chinese are starting to really get into the gold trade, become a big participant in it. And we got to look at some of the history of gold trade. And the city of London, the city with $248 billion beneath its pavement. So let's take a look here at the vaults in London. We're not going to go through this entire article. If you want, you can go find it and read all the background information, but we're going to cover it quickly, and then you'll see how it ties into the next video, but also this whole global gold trade. There's something going on here. I can't even pretend for a moment to know everything that's happening on a global scale, between New York City, between London and Shanghai, Moscow. There are some big things happening, some shaking and some moving. And a lot of it, all of it, most of it is happening around gold and the gold in the world economy. What this foretells for the future, I don't know. I don't know if there's people, super elites, preparing for something, and that's why this is kind of bubbling to the surface. These stories are trickling out. I don't know how long this has been happening behind the scenes, and now we're just finding out about it. But I think these are symptoms and signs of an economic turmoil, currency war. I see your guys' comments. A lot of you talking about things like World War III, currency wars, trade wars leading to shooting wars. There is some friction obviously taking place. These are tectonic movements, plates, collisions. So let's just read about this and then get to the other stuff. A lot of material here. Under London's streets lies a hidden gold mine. It stretches across more than 300,000 square feet under the city, the finance quarter in the heart of Britain's capital. There, beneath the pavement and commuters of Threadneedle Street, lies a maze of 8 Bank of England gold vaults, each stacked with gold bars worth a total sum of around 141 billion pounds, or $200 billion. The bars sit on rows of blue numbered shelves. Every bar weighs precisely 400 ounces, about 12 kilograms, making each currently worth some 350,000 British pounds, or 500,000 US dollars. Comfortably more than the average price of a house in the UK. Each bar looks subtly different depending on where it was refined. Some bars have sloping edges to make them easier to pick up. Others look more like a loaf of bread. You've seen these slides repeatedly on this channel as I occasionally insert images of these vaults, these blue shelves with gold, and in some of them you'll see the Queen of England strolling through those rows. There's some of the bars there now being handled. Now, what there is, however, is there's one of the world's most important traded assets. Deals are done in gold in almost every country in the world. Its price is a crucial barometer for consumer confidence. Prices rise when markets are uncertain and before U.S. elections, like right now. Gold is a hedge against uncertainty, says Jonathan Spall, a longtime gold trader and now managing director of G Cubed Metal. These vaults lie right at the heart of this volatile, incredibly important market. So keep that in mind, you Keynesians, you, and those of you who think gold is worthless. You just heard how important and influential this metal is on a global scale. About 1/5 of all the gold held by the world's governments is in London. In total, 6,256 tons of gold are stored in vaults in and around London, collectively worth about 172 billion pounds, or $248 billion. Okay, opinion time, interjection. I gotta interrupt this article for a repeated comment that I like to insert when we discuss things like this. Yeah. And you guys have heard it before. If gold is so worthless, if it is the archaic and barbarous relic, so many claim that it is, especially those in government, those in major financial institutions, if it is so valueless, why protect it, hide it, stow it in vaults, and why would 1/5 of all the gold held by governments be in London? Because I know there's a lot of them in London who think it's worthless, or they tell you that it is. Remember, don't listen to what they say, look at what they do. A lot of these elites tell people not to buy gold or that it's worthless, and they themselves hoard it by the ton. We've talked about, that's a repeated theme here on the channel. We always talk about how these people, these banks, these institutions, these governments, who always seem to hate gold, despise gold, hoard it. No, you see, they hate and despise when you own it. The citizen, the individual, the plebe, the peasant, the knave. You see, the rules are different for you and for me than them. And because gold is economic liberty, it's freedom, it's how you preserve a dynasty, it's how you transfer your wealth into the future and always maintain and preserve what you have. That's why these governments own it, and that's why they don't want you to own it. They want to have control over you, and they want you as a citizen to depend upon them. So go watch the peasant video that we made so long ago or here on the channel. Now there's the street. You can see underneath it, those people, those happy peasants walk and stroll. The little plebes and knaves and serfs, they stroll to and about their business, driving buses and cabs and eating their little street food and going about their day, working, toiling and struggling for the monarch. Now the Bank of England vaults alone hold 5,134 tons, including the official reserves of the UK Treasury and the vast majority of the physical gold traded in London. Gold owned by 30 other countries is also in these vaults, along with the hoards of about 25 banks. So much gold is kept in Britain's capital, partly to keep it near where the metal is traded. It's also a reflection of the security of London's vaults. The bars arrive in London by surprisingly traditional methods. Some come by sea, shipped from refineries like Pamp in Switzerland, or Rand Refinery outside Johannesburg, South Africa. Getting your gold fix. It isn't just vault locations that are kept under wraps. The gold market itself is secretive and steeped in tradition and ritual, particularly around the fixing system used for setting the price. The price-setting meetings, or fixes, in which there are now 12 direct participants hailing from the UK, US, Canada, China, and France, take place twice a day. When a price matches supply and demand, the price is fixed. So it's basic economics. Supply and demand, where they intersect, that's the price of gold. You're going to hear about that here again. Until 2015, this was done verbally. A chairman would try different prices on the participants, each of whom would say if at that price they would be buyers or sellers. From 1919 until 2004, fixes were done in person in the City of London. Originally, if a participant wished to pause proceedings to change between buying and selling, for example, he would raise a small UK flag. In 2004, the fixes were moved to a conference call. Only last year did the system change to a more modern, electronic auction platform run by the Intercontinental Exchange, again ICE, which also owns the New York Stock Exchange. If everyone knows there are 2 key points in the day to show up, you get the best liquidity balance between buying and selling. This is Matthew Glenville, Chief Operating Officer of the Intercontinental Exchange Benchmark Administration. Transactions in gold total some 85 billion pounds or $120 billion per day. Think of that for a moment. Transactions every day of 120 billion US dollars are done in gold. This spot price is then used as a benchmark for people buying and selling gold around the world. A benchmark where transactions total around 85 billion or $120 billion a day, as we just stated. Portable assets. During good times, gold is less in demand, but when the economy is tough, the metal is highly prized as a safe haven asset. Not quite like storing cash under the mattress, but still a way to hedge against risk in other markets, or resets, or economic defaults when currency collapses. So many reasons. Here's an image here of the gold trade back in the 60s. You can see them sitting around, the traders, scribbling on their notepads and papers, wearing their suits, determining the price of gold for the world. Now, as a result, gold increases in value when markets are volatile. Since the 1,000-point Dow Jones plunge of August 2015, the average price of the morning fix has increased each month, rising from 705 British pounds or 1,000 US dollars in December to 870 pounds or $1,250 in March. When stock markets slump, governments and private investors ditch equities and buy gold, like Russia and China are doing now and have been doing. So there you go. There's a little background information on London, its role, and the gold fix. So a lot of those terms now can maybe perhaps make a little bit more sense with those of you who have just recently started hearing those terms thrown around on the news and the networks and here on the channel. Well, thanks for being here for this initial video for today. I appreciate it. Hopefully you guys gleaned some information from it, and hopefully it motivates you to start hoarding gold of your own little nation. Get your own little vault going. And you can be humble about it. We can only stack within our means. Even if you have 1/10 of an ounce to your name or a gram, you're doing good. Keep stacking. Thanks for being part of the Junius Maltby channel. Appreciate you all being here today. And remember, like, share, subscribe, participate in the conversation. Thanks for joining us.